Hello, welcome all again to our second webinar from the Energy Delta Institute. Today I'm again together with Cyril Widdershoven from the consulting company Feroci. It's a logical follow-up of our webinar that we had last week when there were lots of questions about financial aspects of this crisis in the oil and gas and in the energy in general, and how this will unfold in the future. So we thought that it's good to go back to there and with a little bit more detail. It's in the same platform as last time, the GoToWebinar platform. So now we have a slightly different setup that we're immediately going to have a discussion and ask questions in between. And so again, to the audience as well, if you have questions and you want them on the screen, please use the chat box option in the GoToWebinar program. And then we can see them, and I can ask them of Cyril, and hopefully he can answer them. So I think let's just start. Cyril. So last time we talked about financing. So now you say 12 trillion euros of investments or dollars is under threat. Why is that? How do you come about this number? What does it mean?
The underlying reason is that at the end of last year, two major developments were there. The 360.org and carbon trackers.
Yeah.
They stated that they had already commitments between 6 to 12 trillion.
That was before the crisis. I mean, before the Corona crisis hit. Yeah.
This is all as if nothing has happened at all.
Okay.
Yeah. So before the end of 2019, they came up with a figure between 6 to 12. And then at the same time, during the UN meeting in New York, there was a draft agreed between international institutional investors and banks, etc. And if you count these figures up, then 12 trillion, that's even less than what's the reality, because if everybody that is signing up and is stating in the media that they will divest from hydrocarbon, so oil, gas and coal.
Yeah, in favor of renewables. Yeah.
In favor of whatever else.
Yeah, okay.
Yeah, so that's renewables, that's nuclear or whatever is going to be
the future.
Yeah.
Yeah.
Then we could be even talking about a total of 47 trillion.
So,
however, this does not mean that 47 trillion will be taken out of oil and gas and coal. This is the total amount, because that's the nice little trick of investments under management of these funds and banks, etc.
Yeah. But aims more at these energy projects. That's what we're talking about here.
Yes.
Yeah. Okay. Clear. You told me last time as well that the energy companies in general are having a bad time, already for several years.
Yeah.
And I find that quite interesting, actually, because, why is that? Why is it still that problem? I mean, we have this shift in, of course, like you said, divestment from more traditional energy sources towards renewables. So there's big growth there. There's still some growth also in the fossil fuels.
Yeah.
But why is that? Why is it so hard for companies to make money out of that?
There are the issues of that you have activist shareholders, so shareholders that are trying to force or are forcing that companies are changing, so they are trying to make Shell or BP or Exxon, etc., to go green, which will not happen from one day to the other.
No, that's why we call it transition. Huh?
It's transition, and transition can be a year, but also a little bit more than that.
Yeah.
The second issue is because of activist shareholders and society, and the fact that return on investments in oil and gas have been under pressure, and as I shown last time also, share prices of oil and gas related companies have not brought the same yield as the other ones. You see a shift that investors are looking to get out of their total amount invested in oil and gas to get a higher yield. Now, if I'm the investor and I want to have a higher yield, I do understand that. However, for the oil and gas related companies, this means that to find the necessary investment only to keep up the production at a level we need right now, and I'm talking about before Corona, but even now, the world will need a certain amount of oil and gas. Now, to keep that in place, you need to reinvest every year again. If Corona is over and the world starts to get again better
into the growth path, again, the energy growth path,
then we still need to have an investment in other energy sources and investments in oil and gas, because the projected demand, and this is looking at the facts we know right now.
In the uncertain future, nobody knows, of course, but yes.
Yes, but we will need for a long time and renewables and oil, gas, and other ones to get the energy supply we need. And what people forget always, oil and gas, it's not only energy.
No, true.
It's your Nikes, your Adidas, your mobiles, your plastic bags, your sunglasses.
It's everything.
It's all.
True. Okay. You mentioned shareholders, So shareholder activism, for example, like how this is going to happen. Maybe just first, you show a slide now of the oil and gas price. Good to mention that as well. It's been going down, of course, for a while now. Last time we discussed the OPEC Plus issue as well. That is forcing down the oil price. Is that? Do you see any end of that? Also with the recent news, for example, that the shale oil in the United States, it's being backed up now with the 2 trillion euro Trump plan, but they are also considering some cuts, some production.
They are.
Yes.
Cutting production of loads of shale oil companies is already hit. There are several of them that are already filing for Chapter 11.
So they were already on the edge.
And what people do not understand yet really, yes, the oil price has gone down. Total production is going to hit the market after the 1st of April. Up till now, OPEC is keeping to its
production levels.
After the 1st of April, so in a week, you can expect, if they are going to do it, 2.5-3 million barrels extra, which means that we could hit a surplus of higher than 3.5 million barrels a day.
That's a lot. Yeah.
It's a lot because if this is going to happen, plus the fact that demand is going down extremely hard, then the most negative assessment at present is that there will be a 1.8 billion barrels extra in storage before the end of 2020.
Yeah.
However, if America is going to be hit as hard as we think it's going to be hit,
just like everybody else, I would say.
this is going to be even more. And in the end, there's a simple physical issue. You cannot store more than that you have storage volume.
Yeah, of course.
So in the end,
you're going to dump it on the market. Yeah.
companies will need to cut because you cannot anymore produce. And then what? You produce it, but it needs to go somewhere. So in the end, it will get hit, and what you then will see, prices will go down after the 1st of April, even more than it's being hit now. If it's going to hit 20 or lower, and looking at fundamentals, this is the option. Then US is out, Canada is out, North Sea is quiet.
It's already
dead. Gulf of Mexico is dead. Brazil is dead.
So all investments relating to those areas are also
are
delayed until further notice.
Either delayed or because this will have an effect on the shells and the Exxons, but also on oilfield services. So what you
domino effect, basically.
So what you will see, they will go into a rat race. They want to keep the people because they have hopefully learned from before. It's easy to fire, but it's more difficult and costly when to hire. So when they leave, you never know if they will come back. So they will go down in what they will ask their clients. So maybe less projects will be delayed than that we think right now, at least at oil and
keep a certain minimum level of services available for when it becomes better.
And if you would like to set up a contract with an oil field services, I would say wait until the 8th of April and then make a phone call and say what's on
offer
because they will be cheaper than right now.
I can imagine. How does that relate to LNG, to the gas market? I mean, we're talking about oil price here. It's still coupled to a certain extent.
But LNG, and I know that some major LNG traders and LNG producers are maybe not gonna like this, but LNG was already being hit. There's too much gas, and there is too much LNG already on the market, and will be coming on the market because the projects that are being built right now, then
they have to come.
They will be going on. So Qatar, Russia, Shell, and all the other ones which have made a move from oil to gas are not only being hit by oil, but for sure are going to be hit on the gas side because loads of natural gas contracts are still directly or indirectly linked to
they're coupled, right, with the oil. There's
oil
a slope
and
in the oil in the price.
several LNG contracts are also linked, because in Asia they are now saying either we call for a force majeure, or we say, are you willing or are you open to renegotiate?
This force majeure actually happened a lot already. They pulled that card quite quickly, like, hey, there we go.
Done.
But Asia is recovering to a certain extent, right? I mean, China is opening up a little bit.
Yeah, but that's okay. That's okay. That's not maybe oil and gas, but are we able to trust the news that we hear from China if we know the last 30 years of financial figures, economical figures, growth figures, etc. we have had from China were even less trustworthy as the financial figures from Greece or Italy. So why would we...
Why trust that?
And why is in the OECD countries Corona hitting harder, and in China it's already over? There are some
discrepancies,
discrepancies which could have a huge effect, and China is opening up, but
demand is then not at the same level, I would say, right?
As we saw in the news, they are opening up the factory. They are not opening up the factory for the employees to return yet.
Yeah, that's true. So the slump is still there.
It's there still.
Talking about that, so talking about, like, we talked about shareholders or activism shareholders. What is it isn't that also not a good thing that we have this type of shareholders? I mean, instead of only focusing on dividends, also focusing a little bit more on the future, I would say, almost.
Activist shareholders are a very interesting entity in the whole financial sector. Keep in mind that we had also activist shareholders in the 1980s and the 90s, etc. And when we did not like it anymore, they were called financial vultures, etc. Which were also activists.
You mean try to break up the company and
It's a very good aspect in a shareholder world that you have shareholders that are willing to think about a future that is different than we have right now.
Instead of business as usual.
They also force the company to continuously rethink their own ideas. But they should still be shareholders. They are taking a risk because that's a share. It's a loan that's 100% risk. And they should also take into account that in the end, the majority of the shareholders up till now are investing to get a certain yield. And yes, the yield should not be leading in your strategy.
No, which was the case, I think, for most of the shareholders, of course.
But you also can say, let's do also there extended transition and not force, let's say, Shell to leave oil and gas even and become something like
a different energy company.
Energy. The yield on electricity is still a little bit lower than on hydrocarbon.
Well, but even with all this low price and this war, I mean, what I'm hearing you saying is that this risk is still there. It's increasing massively. So you would say that's actually maybe a positive thing. Also, this crisis perhaps to realize for companies that how am I going to deal with this? How can I be flexible?
Yeah.
Am I going to go into certain renewables? Am I going to divest my portfolio myself? How do you see that? Is there any positive impact on Corona, so to say?
There is a positive impact because change is needed.
Mm-hmm.
However, do not overestimate yet the influence of activist shareholders or changes on oil and gas
It's
IOCs.
Yeah.
More or less, it's for loads of them, it's okay. It's maybe the same amount as their media budget.
Yeah.
And by some, it's used as what activist shareholders would say is greenwashing. Washing.
Yeah. Well, it takes time to adapt, I would say.
Yes.
Also from something.
Yes.
You could
But
take here.
don't force them to leave it all, because whatever happens, yes, energy we can bring maybe quick into CO2 neutral.
Yeah.
The rest of the production of plastics, etc., that's going to be harder. And yes, I know what you're going to say. You can crack whatever and change whatever. Yes, but then people also are only able to pay a certain product at a certain price, and
or want to pay that, or are used to pay that, of course.
Well, if we look at other options, then if it's 7, 8, 9 times more
that is not
expensive, then
no.
maybe you are able to pay it, or me, but somebody else.
Yeah, a large part of the world, of course, still depend on this kind of. There are some questions also from the audience about this, the big projects that may not go through, can be affected most by this situation.
Yeah.
Can you mention some examples, perhaps, like this major project that are under risk right now?
LNG liquefaction in the USA.
Mm-hmm. But in general, you mean?
Yes.
Yeah.
Yes. Energy deal, the Green Deal.
Yeah.
Yes, I hear that if the European Union and European governments are able to find immense amounts of money to save the economy, that should also be able for
used for, exactly.
Green Deal.
Yeah, but you think it's a good thing, just as in between? Like, did you put these conditions to this financing, that you say, okay, yes, we help you out right now, like KLM, for example, we help out our national airlines, and then we say, okay, you have to be green quicker than we anticipate. Or is there a form of activist shareholding?
I think reality is a little bit more stubborn than what we are singing right now. Mm-hmm. We both know that to bring new ideas to the market takes longer than a year.
Yeah.
And it also is it available. Are you able to bring aerospace by investing now? Okay, let's say $500 billion will go into greening up aerospace.
Mm-hmm. Yeah.
Will we see the effects right now? No.
Yeah.
Will we see it in 2022? No.
Yeah.
And in 2021 we have elections.
Mm-hmm.
And when things are going to be a little bit more easy for all of us, then we will look at our wallet and think, okay, taxes are up, etc.
Life is becoming cheaper, more expensive.
Which things are needed? Mm-hmm. That's your wallet needed. And which things we can put delay for 1, 2, 3, 5 years.
Yeah. True. Yeah. Okay, clear. Yeah, I was just wondering, there are some nice questions that are related to this sort of weird, maybe not weird is not the correct term, but the relationship between low oil prices, corona, and electrification prices like that is a bad thing also for your would it slow down our renewable energy strategy, for example, because we have this very low oil prices.
In theory, but that's pre-corona, because society is going to change because of this. Yeah. But looking at how it was when prices of oil and gas are low, when the gasoline price on the highway is extremely low, and in most areas of the world it's cheaper than here in Holland.
Yeah, well, there's taxes, of course, but still.
Then clients, consumers will make the math on what is cheaper. And as long as EVs, to buy an EV, it's more expensive than many other cars. As long as the mass on this increasingly is still being influenced by the price of a liter of gasoline or a gallon, you will see delays. However, will the demand destruction for oil have a positive effect, because some of the producers are going to be out, and some will never return. Now, if that's going to push up gasoline prices and feedstock prices again up to 50, 60, 80 or more, you could see that maybe it's not going to happen in 2021. Because in 2021, nothing is going to happen.
Because we all been saved by our national governments, basically.
After that, you could argue that renewables will have a positive effect of this, as long as the cost of the crisis at this moment are not too high.
Because otherwise you don't have money.
And with an increased unemployment, people first want to have a job. And there are not so many jobs in renewables.
Well, that's also interesting you say that. Yes, that may be true now, but how about that if you think about it? Last time you talked about the spider in the web, which was China. So the spider in the web, if you take it out, then the web has no...
Bridge of me,
exactly.
Nice little bit.
The spider for the web makes no sense. So maybe it's a better idea to localize production chains a little bit more. In that sense, renewables is a very good idea. Because in Europe, for example, not in the US perhaps, but in Europe there's not really a lot of local production of hydrocarbons. There is some, of course, Mediterranean basin, that kind of thing, but not that much. So in that sense, it can be a good idea as well.
That would be a factor that people will need to assess. However, as I sometimes say during my courses, God is great, but God also can be bastard. Sometimes. Like with oil and gas, somebody has decided oil and gas is mostly represented in a certain region. The materials for renewable technology, if you look at that, you have the OPEC for oil and gas, and you can bring me 2 or 3 countries, including China, that is leading in
the renewable,
the minerals and the specialties needed for renewables. So yes, we can take it all to Europe, which we should have done before.
Yeah.
But that's always.
Yeah, exactly. It's
because
the ship has sailed.
Cheaper in China.
Yeah.
And China can block loads of the transfer of minerals and metals needed for the products that we then want to make here.
So basically you're saying it's too late.
It's not too late. We can do it, but it's not going to make a huge impact on that particular issue.
Okay. But how can perhaps companies like Shell help with that too? I mean, how well is Shell placed to, for example, lead this? They already have projects on the North Sea. Can they increase their share now? Is this a good opportunity for a company like Shell to be more proactive in that area, in the renewables, in the changing of in bringing production home, so to say? Yeah. How well equipped is Shell for that?
Pre-corona, I would say Shell has the possibility to increase their impact on renewables. Mm-hmm. Yes, they also wanted to buy a Dutch utility, etc., which failed because it went to Asia.
Mm-hmm.
Yeah,
Japanese bought it. Yeah,
owners. Yeah, the post-corona, and we see it right now, Shell is being hit extremely. Mm-hmm. And Shell's shareholders have become, okay, that's a political incorrect statement, but somehow addicted to a yearly
revenue
dividend.
Yeah, dividend. Yeah, exactly.
Shell, you never needed to sell because you knew.
You knew you had the correct dividend. Yeah, you told me
now,
last time as well. Yeah.
With the financial situation now, with the fact that Shell is hit on oil and hit in gas extremely, Shell has a financial issue.
Yeah.
Now, then you have the majority of the shareholders of Shell, even they are not in the news. Mm-hmm. They are never shouting at Shell.
No.
They are there to get a yield. Yeah? Now, for Shell, the most important issue right now, like for Exxon and BP, etc., keep the shareholders happy, because otherwise your share price will go down.
Yeah, which happened to a certain extent already, yeah.
And what consumers like us never understand, your old age pension depends of oil and gas.
On the dividends of oil, not all. Divesting of that too.
I know that Dutch institutional investors hold a lot of assets in Shell. Mm-hmm. And they are financing it also.
Yeah.
So if we force them to go out to invest in something that does not bring the yield, and most probably never will bring the same yields.
Yeah. What's the point? Yeah.
Your future and my future after that we are 67 looks a little bit less promising. It's not going to be a house in southern Italy with a bottle of wine, but sitting at home and freezing.
Yeah. No, freezing. Yeah, that can be, okay, that's a possibility. Yeah, okay, clear. We don't have that much time left, so I was thinking maybe we can go back a little bit to how do you see the risk changing? So the risk for these investments you already talked about at length, but how is it post-corona, post-OPEC plus trade oil war, I would say? How do you see the cards being shuffled then? What is what is your perception on that? I know it's a difficult question. So
No, my glass balls sometimes hopefully really works well.
Yeah.
Financing of new projects will be the next 2, 3 to 5 years extremely hard. Mm-hmm. Yields will be extremely low.
Yeah.
Interest in investing in hydrocarbons or even in energy, which is needed. Okay, we said it's 47 trillion is at risk, but almost the 7 amount of money is needed to do the energy transition.
Yeah.
Worldwide.
So we have to get that somewhere as well, right?
Somewhere.
Yeah.
And we do not have the US federal bank that just can print US dollars, and the European Union already has an issue with this. Yeah. So we will need to find somewhere the additional cash. Now, what's the main risk is, we have been liberalizing our energy sector, which is maybe So we have put all our energy companies in the hand of private shareholders.
With the shareholder mindset.
With the shareholder mindset. They are seeing now, my return on my investment is not looking extremely well, or at present is red everywhere.
So no more investments, no more
investments, or maybe I'm gonna look to sell it. And the only ones that are able to buy it and have an appetite are state-owned entities.
It's the government, or state-owned entities,
State-owned entities in energy. Aramco's, ADNOC's, Gazprom, CNOOC, CNPC.
So they have a huge advantage, what you're saying.
They have, at this moment, I would say, like what I said, it's wait another month and go from fear to greed. And they already are in the greed mindset, because almost you have never been able to buy oil and gas and energy, renewable, wind, solar.
This cheap.
And then they are in the hands of a state-owned entity with a different mindset. No activist shareholders.
One shareholder, the government.
It's or you have 95%, and 5% is listed, but they have also a different strategy. For them, energy is influence. For us, energy is that I can use my mobile.
As consumer, it's different. Exactly. We just want to pull it out of the plug, and that's it.
The main risk is what is going to happen in mergers and acquisitions and investment, because they have the funds they did not use really yet. The
reserves,
sovereign wealth funds, the real estate in London City, etc. If they are going to use that right now, you will see not only a financial geopolitical shift in energy, but you also will see a real power shift in geopolitical.
But that's a huge risk. If I hear you talking about it,
it's a risk that I hope that people are going to think about after that we have survived Corona.
Yeah, because otherwise, like you said, if there's influence from other parties that is not necessarily in line with, for example, renewable energy strategies, with consumer pricing, with, there's a question from the audience, for example, with the North Sea oil and gas sector in general. If that is cheaply bought by national oil companies, is there any future left?
It's already being bought since the 1990s, Abu Dhabi, its investment fund, major shareholder, and
is going with money,
has bought one asset after the other. The largest gas storage in the Netherlands during our gas hub theory.
The gas roundabout.
Northwest European gas roundabout, the largest gas hub is in the hand of Abu Dhabi.
Yeah, yeah.
And the gas is not from Groningen.
No.
The gas comes from Russia.
And perhaps Norway, but mostly Russia. Yeah,
but
yeah.
So it's, you are never able to get out geopolitics and financing and energy. That's the same.
Yeah.
And if we leave all of it into privately run organizations, you look, if I'm the owner and somebody is offering me a yield that I find extremely interesting, I'm going to sign.
Yeah, and it's your own decision. There's no national mindset or strategic mindset behind it. Yeah.
Here in the Netherlands, we think we get electricity from a Dutch company. Well, as we know, they speak Swedish or whatever.
Yeah, or Japanese. Yeah.
Or Japanese.
Yeah. Yeah, but that's actually quite interesting if you then add up what we're talking about with this 12 trillion or 47 trillion investment. That's under threat. That's huge.
Yeah.
And then on top of that, we might run the risk that in a month or so all our major assets could be up for grabs for all the national oil companies or national utility companies that are everywhere in the world.
If I would be advisor to Saudi Aramco
or Gazprom,
or Gazprom, I would say,
go for it.
Have a look. Yeah. You're never going to get it cheaper than now. And then you are able to have your market locked in. You have your own financing.
Yeah.
No issue.
Yeah. So you can determine the price.
No interference. Yeah. Of anybody. Yeah. You're not even listed in New York. Yeah. And you have influence on the energy sector in Europe.
Is it national governments, the pouring in of the €1 trillion, for example, that they're trying to save the economy? Is it something for them to also be aware of this, to make sure that there's some kind of backup plan or conditions attached to this that make sure that we don't have this situation?
I think
is that even possible?
They should use the immense amount of cash that is being poured in. In a very prudent way, so that you make sure that your vital sectors, and some will not like what I say, but for Europe, oil and gas is still vital.
Yeah.
You keep them in place.
Yeah.
Let them not fail.
Yeah.
Like the banks.
Like nationalize that to a certain extent. Yeah.
Like the banks. A Shell, a BP, a Total, and Eni is too big to fail. But if you let them fail,
then they get taken over.
Yeah, of course.
And there's a risk in that.
Of course.
Yeah, wow. Very interesting, Cyril. I think we're running out of time, so I think we leave it at this. Not very positive note, but hopefully we are on time to say this message that we can still save what we can save. Next time going to do these webinars every week. So next week there's another webinar. Mostly we'll be talking about hydrogen, so a completely different topic than this week, but more on the technical things and the large project that's going on. So thank you very much. If there are any questions that I didn't answer during this talk, we'll again send them around with the answers of Cyril. And you can download the slide pack, which we did not use that much, but I think that's great for your own information also. So thank you very much. Thank you, Cyril.
Okay.
And
thank you.
See you around.